Good morning, everyone, and welcome to the Sirius Report. My name is Ken Shorgen, and interestingly, as you note, we are starting to put out more and more shorter YouTube podcasts, primarily dedicated to specific things that are going on geopolitically, financially, economically, and the like. You could almost consider it our version of the YouTube short. Paul put one out about a rumor, obviously, and I'm going to go ahead and do one in regards today to an interesting report that just came out in the media regarding a too big to fail bank actually assessing that the U.S. may lose its power over the global reserve currency. Deutsche Bank came out and sees a risk of the U.S. dollar losing its safe haven status. The U.S. dollar may lose its traditional safe haven status as global markets adjust to a new geopolitical order. We do not write this lightly, but the speed and scale of global shifts is so rapid that it needs to be acknowledged as a possibility. This according to George Saravelos, the bank's global head of FX strategy, in a note to clients. It's hard to overestimate the scale of change taking place in global economic and geopolitical relations in just a matter of days. Now, why is this significant? Well, of course, we have the DXY, which is the US dollar against a basket of currencies, primarily Western currencies. The pound, the euro, the yen, the Swiss franc. And we're seeing that start to decline. It's at 106, fell into the 105 handle, and is hovering a little bit over 106 right now. But more importantly, and this is something that was mentioned in the economic podcast we put out earlier today, in regards to the carry trade. Now, I believe Paul explained the carry trade. It's an arbitrage between the yen and the dollar to then use the lesser currency to buy bonds and subsequently use those bonds as collateral to buy other assets. Well, there's a thing when it comes to the carry trade. The magic number is 150. When the Japanese yen to the dollar is above 150, the carry trade works in favor of the investor. But once it falls below 150, then all of a sudden we start getting the yields not being at a premium for the bonds, and we're starting to see margins come along the way. So with this being said, currently the Japanese yen to the dollar is at 148.39. And this, despite over the past 3 days, the Bank of Japan and the Japanese government have been trying to raise their currency to support their currency, but it doesn't matter. It is selling off. So the carry trade is going through. Then, of course, we have the start today of the first shelving of tariffs that President Trump is doing against Mexico and Canada. This, of course, is putting a spotlight on the dollar. And as Deutsche Bank noted, there is a good possibility that nations, because of tariffs and because of this push away from the dollar, are not going to buy treasuries to go ahead and support the reserve currency. So as a safe haven, could this be the point where the dollar is no longer being held in that regard? And is the multipolar world and bilateral currency trade suddenly finding its support in regards to more than just the BRICS nations, more than the ASEAN nations, more than the Eurasian Economic Union? Could this be where Europe decides that they're going to disconnect from the dollar, and from there we're going to move into a brand new, brave new world? Anyway, as I mentioned, just wanted to give an update on this, something of vast importance when a too big to fail bank feels the need to say that the dollar is no longer a safe haven. As always, want to thank everybody for being a part of the Sirius Report community, for all of your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to, and until the next time we get together, have a great day.